hi traders, this is Parthiban and this is trading ideas for 31st January 2017 Tuesday, episode 18. Okay, this is the risk disclaimers. Please do not trade with the money that you cannot afford to lose. Always choose a proper money management. Okay, okay. I'm going to prepare 3 videos today. Okay, first I'm going to explain Canadian Swiss franc, which was my signal yesterday. Okay. On daily chart, if you look at Canadian Swiss franc, yeah, this is a very good key level. This let me mark in. Let me increase the thickness. Okay. Okay. This is a very good key level. You see, price reacted, rejected, price reacted and rejected, reacted and rejected. So each time market is try to attempt, sellers push it down, sellers push it down, sellers push it down. Then a lot of buyers. This is a sign of a lot of buyers. Okay, a lot of buyers gathered and penetrated. Again, sellers were defending this price, pushing it down. Buyers again defending, pushing it higher, but sellers managed to defend. They push it lower, but buyers defended. They try to go up. So basically, the buyers and sellers are fighting. This is a bit unique price action story. So sellers defending, buyers also defending. So we anticipate market to hover here and a breakout either up or down gonna happen. So what as a price action trader we can do is wait until the breakout to happen. Let's say it break out this way. Okay, for example, it break out this way, retest. As retest, you can go short massively. Then you can grow your trade. But if at all the breakout occurs on the upper side, at the retest, you can go in as a buyer and then grow your trade. Okay, this is on the daily chart. But look at H4. Um, you see there's an inefficient market here. Skinny leg. Market form and this is the new low. Okay. New low. This is the neckline. Once market close higher, retest, you go short here. Your take profit should be here. So this skinny leg is covered. Okay. But how about this skinny leg? So yesterday, I think, let me show you guys. So I was given a signal trading ideas here. CAD Swiss franc, sell limit at this price. Okay. So our anticipation was like this. Market will retest up, can go short, and your stop loss should be here. Take profit should be here. Take profit too, and I'm looking more downside for this currency pair. Okay, but that doesn't mean I'll just open my trade like that. I'll manage my risk well because we know what we're doing. Okay, what happened here? I know a couple of traders took a position at this area. Their pending trade sell limit triggered, and market was just advancing high and high. So they called me. They say, Parthiban, I think the trade is wrong. It's going reverse. I say, my understanding is, why are we placing stop loss here and not over here? You got to think why we place stop loss here, because this entire zone is the zone for the market to react. If at all it react above this, that means I'm not interested in this currency pair. So you cannot expect that your every single trade that you enter, it shouldn't reverse. That's the reason why we give a space for the market to react. Why many novice traders fail? Because they're not giving enough space for the market to react, or they give too much space for the market to react. You got to determine the space, which is called risk, and you got to manage your reward also. I took a position here, and my risk, my stop loss here. When the market react here, I make about 1 to 2 risk reward ratio. So I wait for the good opportunity, or maybe even more, 1 to 2.5. So once market move to this level, actually I'll already break even my trade from. I brought my stop loss back to the entry price, and I'll just grow my trade. So this trade is zero risk for me. Zero risk. Zero risk. That means even if the market reverse up, I'm not going to lose anything. But those who have taken position at hold on, at this area, you cannot break even now. Okay, this is whatever I taught you guys, the basic, where your risk reward won't be not so lucrative. But if you learn price action, you know how to manage a trade. Okay, so you can hold your trade until the market reach the take profit, probably this level, 75.42.0. Okay, so hope this benefits you guys, and let's see the result. Took advantage on the pullback. So the person who called me, don't worry, because you already entered a trade with a stop loss. This is the opportunity for the other traders who wants to sell at a higher price. So that's the only reason I took a trade here. You see, I took a trade. Okay, took a trade here, had a high price, and market drop after that. That means every traders things are like the price. I mean price action traders. Okay, this is the profit so far. So market still growing. Okay. So now, guys, look at this. Uh, this is the entry that I took in a different account just now. Okay, this account, stop loss here. So what I want you guys to do is, even if market create a new high, you can still go short those who missed the opportunity. Okay, but don't overbet on any single trade. So I'm anticipating market to react this area. So probably all of you guys will be closing your position. What I'll do is I'll close probably 50 or 70% of my profit, or 30% of my profit. It depends on the market, how it reacts here. Then I'll grow my profit. Okay, so I want to see what's the price action at this area. If a lot of sellers comes, then I'm going to keep my trade grow. If if I see a sign of buyers coming in, then I'll be closing majority of my trade. So on the daily chart, I think you guys understand the price action story here. It's forming a triangle, and look at this. Yesterday, a lot of sellers came in. A lot of sellers. Okay, this is just for the skinny leg price action story. So those who see, let's look at the skinny leg in a lower time frame. Just want to explain to this. Okay, 1 minute. The skinny leg works in all the time frame. So okay. 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 Look at this. This is a skinny leg here. Let's zoom in. Assume this is this is the new high. Okay. We see a skinny leg here. Okay. Okay. This is the skirt. Okay, look at this skinny leg. Market created bounce and created new high, so these become the skirt. Anything anything above is, this is a buyer zone. Here, let me mark the buyer zone clearly. This is the buyer zone. Okay, and this is the seller zone. This is the seller zone. Okay, so what happened is when the market closed below a retest, a lot of sellers came in. They hit the bottom, the skinny leg covered, then buyers entering. So if you look at the bigger time frame, the anatomy of the market, you see. Okay, let me erase this. Look at this. If there are a lot of inefficient market in between, but this is not a very good skinny leg. But assume this is a skinny leg. You take this as a skinny leg. Market reacted, retest and create a new high. So anything once market close below, you can sell. So market created close below this, a lot of sellers will come in. As a price action traders, we will go in only after see a sign of buyers coming. I will go in over here. This is a very good engulfing. So I'll put my sell trade here, my stop loss here. So other price action traders who don't know, like only learn skinny leg, they will be entering here, their stop loss here, and they take profit this level. You make money, but you hold your trade longer period. But if you learn the exact entries, how to manage your trade, your risk is very little, your reward is high, and you don't wait unnecessarily, to hold or to hold the trade. But you can't learn this immediately because it takes time to learn, and then you got to capture the basic price action movement, like market always create high, low, high, higher low. See, high, low, high, higher low. Market penetrated retest. A lot of buyers come in. They try to advance but fail. Market drop. So it's actually quite easy and simple. Okay. So I'm going to stop the video here, but before that, wait, hold on. So I just want to explain to you guys a message here. How important the risk reward ratio? Because if probably you guys might be trading for past 3 years or 5 years, you know, heard of risk. What is risk reward ratio? Just hold on. Probably you never heard of the word risk reward ratio. What George Soros, the the hedge fund manager, I think his net worth is but close to $25 billion. What is his message is, it is not whether you are right or wrong that's important, but how much money you make when you right and how much money you lose when you wrong. So what's the message? Let's say the trader A wins and trader B, okay, wins, lose, okay, same outcome. But assume this trader A bet uneven, like he risk $50, he made $50. The next trade he risk $100, he lose $100. The next trade he bet, let's say 200, he win 200. But assume this trader who fixed the trader B, who knows the risk reward ratio, he risk the bet amount same. Let's say $50. He risk $50, but his risk reward, let's say assume 1 to 2. He make $100. And the lose trade, he risk 50. He lose 50. The win again, he risk $50. But since the risk reward ratio 1 to 2, he make $100. So overall, he made about $150. Okay. This trade at this point of junction, in this junction, he looks like he's profitable, 200, 250, 150. Both of them look same, but this trader exposed to more risk in future because he don't have a proper money management. He don't have a proper risk reward ratio favoring him. It's just 1 to 1, and even in that 1 to 1 risk reward ratio, you don't have a proper money management, not even trade for every trades. So this gonna be confirmed disaster. So hope this message you guys understand on this. All the successful traders in the world, they use a proper money management, a fixed number of fixed lot or fixed money that they risk. Second, they use a proper risk reward ratio. Third, they look everything as a probability. So I'm trying my very best to educate the novice traders, because by not knowing this, it's gonna cost you two things. One, money. See, I've seen a lot of people telling me, Parthiban, I'm trading for past 5 years, 3 years, 6 years, 8 years, 20 years. I've lost $20,000, $30,000, $100,000, or $10,000. So everyone have paid their price to know what's the success, but they have bet a lot of money on that, and they have risked a lot. If you don't know whatever I'm saying, like money management, risk reward ratio, and fixed things, two things have cost you. One is the money that you have lost. Second, the time. Time is more very valuable. If someone knows this, like someone like lost about $20,000, I think many have experienced dollar. He lost the $20,000, and still he don't know what is the risk reward ratio, money management. If you improve all these, your trading performance will increase dramatically. That's I can guarantee on that. But these are the elements which boring element of trading, where people are not interested. They want to see money now. They put trade to $200 or $500. They want to see $500 now. So if you're focused on the money, if you're too focused on money, you will lose money. You're going to focus on the other elements: risk reward ratio, money management, and trading is actually kind of a boring activity where you take a lot of consideration, calculation, analysis. Then only you enter the trade. But novice traders want the excitement. They want to enter many trades and they want to make many money. They, in their mind, they think the more trade I enter, the more money I'm going to make. Actually, that's wrong. The less trade you're going to enter, the more money you're going to make, because risk reward will favor to you. So these are the common language the fund managers and successful traders speaks. And what I personally doing is I want to educate the novice traders on this, because by knowing this, probably we teach this at RM for 400 ringgit total. Like you attend our value pack and intermediate, totally you just spend about 400 ringgit, close to $80. Okay, this is just for the cost. We don't make any money on this. But what you save is, you save your $20,000, and the time, let's say if the person have learned spent about 7 years and still never learned this, that means the 7 years is lost and the $20,000 is lost. So what we want is, we want to deliver the importance of trading so that you guys can trade properly and make consistent profits. Okay guys, safe trade.